Welcome to today's Explainer. Today we're unpacking a fascinating and, honestly, a massive shift happening right now in Nepal's financial landscape. We're going to be looking at a very specialized type of institution built for a unique purpose and exploring exactly what happens when the big market giants start creeping into their territory.
So let's dive right into the central mystery we're tackling today. When you look at Nepal's banking and financial institutions, there's one group that really stands out. But not for its massive growth. No, it stands out for its rapid disappearance. Even though they historically filled a highly unique, absolutely crucial market gap, Class C financial institutions are facing a literal existential squeeze from bigger players. Why? What's driving them to merge, convert, or just straight up vanish?
To figure this out, here's our roadmap for the Explainer. First, we'll look at what exactly a finance company is. Then we'll cover their history and early milestones. After that, we'll look at the minimum capital requirements, compare finance companies directly versus banks, and finally, unpack the dramatic decline story.
Okay, Section 1. What is a finance company? Defining the niche.
Legally speaking, under the Bank and Financial Institutions Act, a finance company is defined as a Class C institution. They're licensed and heavily regulated by the central bank, Nepal Rastra Bank. Now you might be wondering, don't they just act like regular banks? Well, they do accept deposits, yeah, but the key thing here is that they sit in the third tier of Nepal's four-tier financial system. Because of this Class C label, they operate within a highly specific working area, and their lending focuses on a much narrower lane. Historically, they've been centered around things like housing, leasing, and consumer finance.
Actually, look at this list. It's fascinating just how incredibly specialized their product range is compared to your everyday full-service retail bank. While a commercial bank is out there trying to be everything to everyone, a finance company is historically this laser-focused specialist. Their core functions include hire purchase financing, how regular folks and small businesses actually get loans for vehicles and heavy equipment. They also handle leasing arrangements, provide vital working capital for small businesses that might not meet the super rigid criteria of a giant Class A commercial bank, and if they're qualified, they can even offer merchant banking services.
And just to be clear, this model is absolutely not just a uniquely Nepali invention. Globally, this is a widely recognized setup. They're usually called non-banking financial companies, or NBFCs. You'll see this right next door in India, for example, where NBFCs step in to provide bank-like credit to underserved segments, like vehicle buyers and small enterprises, that the big full-service banks might just totally overlook. They're meant to operate perfectly alongside traditional banks.
Moving on to Section 2, History and Early Milestones, Filling the Market Gap.
If we trace the timeline back, we see this really fascinating arc. The whole shebang started in 1985 with the Finance Company Act, which was the first dedicated law aimed at shaking things up and increasing competition in the financial market. By 1992, the public sector Nepal Housing Development Finance Company became the very first to open its doors, pioneering housing finance in the country. The 90s saw rapid growth, but look down at the end of the timeline there. 2015 to 2016, Nepal Rastra Bank dropped a sweeping capital-raising policy. This was an absolute game-changer. It fundamentally shifted the sector's trajectory forever.
Which brings us to Section 3, the minimum capital requirements, the regulatory structure.
To wrap your head around their operational scale, we need to look at how they're structured. Unlike Class B development banks, which use a three-tier system, the central bank requires a much simpler two-tier working area structure for Class C finance companies. So, to operate at a national level, a company has to have a minimum paid-up capital of 800 million rupees. If they want to stay smaller and operate at a 1 to 3 district level, they need 400 million rupees.
But of course, it's not just about the cash you start with. To make sure the financial system stays completely stable, these companies are heavily regulated. Just like the massive Class A commercial banks, finance companies are required to maintain a strict 6% core capital ratio and a 10% total capital adequacy ratio. So even though they're smaller, they're literally held to the exact same rigorous Basel III international frameworks as the top-tier players.
Let's move to Section 4, finance companies versus banks, the specialist versus generalist.
When we compare them directly side by side, the structural differences just jump right out at you. Development banks require anywhere from 500 million up to a whopping 2.5 billion rupees to operate. Finance companies, they sit much lower, at that 400 to 800 million mark. But the real kicker is the product range. Development banks act a whole lot like commercial banks for everyday retail customers. Finance companies are restricted to a way narrower, specialized set of credit products. And get this, as of 2026, there are only 16 finance companies left in total, which makes them the absolute smallest financial institution class in Nepal.
It's a total David versus Goliath situation. Development banks are the generalists. They're focusing on broad regional and sectoral economic development. But finance companies, they were designed to own one very specific niche, to be the absolute go-to experts for hire purchase, leasing, and housing finance. But here's the massive problem they ran into. As the banking sector evolved, commercial and development banks started aggressively expanding their own product lines right into these exact same niches. The big guys basically started challenging the specialists on their own home turf.
And that brings us to Section 5, the dramatic decline story, the consolidation wave.
Seriously, just look at the sheer drop. It's staggering. In January of 2018, you had 24 finance companies happily operating across Nepal. Fast forward to 2026, and that number has plummeted to just 16. We're talking about roughly a third of the entire sector just vanishing in under a decade. That is the sharpest proportional decline of any banking and financial institution class in the entire country. No question.
So, the big question is, why did this happen? Well, remember that 2015-2016 Nepal Rastra bank capital raising policy we talked about earlier? That was the trigger. By sharply jacking up the minimum paid-up capital, the central bank purposefully created this intense regulatory pressure. Smaller finance companies looked at the new numbers and realized they simply couldn't meet those minimums on their own. It was adapt or die. Some merged with other finance companies just to pool their cash. Some converted their licenses to become Class B development banks. And others, they used mergers as a stepping stone to jump right up to the top tier.
A perfect historical example of this upward mobility is Prudential Finance Company. Back in 2008, they didn't just merge with another small finance company. Nope, they merged directly into NMB Bank Nepal alongside two development banks. Doing this allowed them to completely upgrade their status from a Class C specialist all the way into a Class A commercial bank. It perfectly shows how the boundaries between these financial tiers aren't fixed. They're constantly shifting through consolidation, which more often than not means swallowing the smaller players whole.
Which leads us with a really compelling final thought. We've seen how these finance companies historically provided absolutely vital, specialized credit. But today, they're facing immense capital requirements. And those massive, full-service commercial banks are more than happy to offer the exact same auto loans and housing finance that used to belong exclusively to the Class C guys. So as these lines continue to blur, we have to ask ourselves, are we literally witnessing the final days of Nepal's specialized finance companies? Thanks so much for exploring this with us on today's Explainer.